In this video, I'm going to demonstrate an effective way to use Doji candlesticks in Forex trading. But if you don't know what a Doji is, then don't worry, because I'll be explaining that too. We'll look at what the Doji is, and then I'll be showing you exactly how we can use them as part of our trade setup. Once we have the strategy and all the rules, then I'm going to test 3 different exits using the same setup. And I'm going to test those 3 different exits across 14 of the Forex pairs, and then collectively as a portfolio. So in all, we're going to do 45 different tests. And I have to say, some of today's initial testing really does look pretty good. And I'm doing these tests to add to a strategy database, which we're building here together on YouTube. Each week I'm programming and testing a different strategy. Then I'll walk you through it all with a video, and then I'll record the results in the strategy database. I'm giving everybody free access to the strategy database so that you can see which strategies work on which markets and which don't work on which markets. And you'll be able to sort the strategy database by market, strategy type, win rate, etc. And next to each strategy will be a video link to the corresponding video, a bit like we're doing today. I'll leave the links for the free strategy database down in the description. I got the idea for this strategy on a great resource page on a website called Oxford Capital Strategies. This strategy they're calling the Doji pattern reversal. My rules are ever so slightly different, and I've reduced the number of tests to 3 just to keep things simple. They tested out a lot of the futures markets, where I'm going to be testing the Forex markets. If I was to do more tests, then I think that would warrant more videos. The strategy has got an easy setup to spot, and it's very easy to get in and out of the trades. All the testing I'm carrying out is 100% automated, meaning that I program the rules into the software and the computer does the testing for me. This means that there's very little room for human error. None of the rules or the strategy requires any discretionary input. So what that means is if you do the same tests, your results are going to be very, very similar to mine. So let me show you how this strategy works. The first thing we're looking for, and I've got a little example here to show you, is for that Doji candle. Now, for the purposes of this strategy, I'm identifying a Doji candle, or in this case it's going to be a daily bar or daily candle, as a bar which has a body size less than 10% of the entire candle, or the entire range. So let me just show you. So this candle here fits the description. So you see it's got a very, very small body, and the body, which is the distance between the open and the close, the size of that in pips is less than 10% over the total range, which is measured by the high to the low. Okay, so we can quickly see that that's our Doji candle. Looking at other examples, this little one down here, that's probably a Doji that we would use for this strategy, and maybe this one here. But that's not all we need. So let's have a look at the next rules. So the trade entries, number 1 is identify that Doji, okay? Number 2, now we'll deal with long trades now. Yesterday's close has to be the lowest close over the last 10 bars. Or if we're looking at short trades, yesterday's close has to be the highest close over the last 10 bars. So looking back at the example, we can see that yesterday, which is going to be this bar here, the bar prior to the Doji, now the close, which is here, has to be the highest over the last 10 bars. And if we count back 10 bars, we can see clearly, yes, it was the highest close over the last 10 bars, because this is a reversal setup. So we're looking for some extreme pushes up, and then we're looking to short them, and the opposite when we're going to go long. Once we've seen these 2 conditions, then we're going to place a sell short stop order at the Doji low. The opposite is going to be for long trades. So once we've seen this, we place a sell short stop order at the low of this Doji for the next day, and then the next day, sure enough, prices broke through that low and got us into the trade. Okay, so that's quite straightforward. So that sums up the entries. Then looking at the exits, we've just got a kind of a fail-safe stop loss at 6 times the average true range over the last 20 bars or 20 days. We've got a stop and reverse, which is very rare. That means that if we haven't hit either our stop losses or our exits, but we get a setup to enter a trade in the opposite direction, we then exit the current direction and then enter the opposite direction. Okay, but that rarely happens. And then the exits that we're really interested in for this strategy are number 3 and number 4. Number 3 is the bailout exit, or first profitable close. What that means is once we're in the trade, at the end of the day, we look to see if that trade's in profit or not. If it's in profit, then we exit the trade at the end of the day. If it's not in profit, we leave the trade running and we look at the end of the next day to see if it's in profit or not. And we do that every day we're in that trade still. And number 4 is just a simple timed exit. And we could exit after 2 days, 4 days, 6 days, but I'm going to use 5 days and 10 days. I've just picked those. I don't want to be in the trade too much longer than 10 days, although we certainly could test that. But for now, I'm just going to test what happens if we exit the trades, and we could be in profit or loss after 5 days and then 10 days. So we'll be testing 2 different timed exits and the bailout exit across the portfolio of 14 Forex pairs. We'll be using Forex data from Moanda from January 2008 through to early February 2023. And all the results we're going to see are going to be in pips rather than the base currency of the pairs that we're looking at. And I haven't added any trade costs into this, but we'll talk a little bit more about that when we start to look at the results. The first results we're going to look at are going to be using that bailout exit. So let's have a look at the performance report. This is the performance report of the complete portfolio of all of the 14 pairs. And we can see that it makes 4,600 pips in total. So in total, the portfolio is profitable. So that's quite a good start. That's what the equity curve looks like across the whole portfolio. But obviously we are going to have some pairs which perform much better than others. Looking at the total trade analysis, we've got an average trade of 4.6 pips. Now, that's going to be a little bit low by the time we've included costs in all those different pairs, but it's not bad. It's a decent start. But look at the percentage profitable, 88.63%. That's really, really high, isn't it? And partly that's because we've got a wide stop loss and we've got a first profitable close type exit. But let's have a look at the Forex pairs individually. And I'll just run through the most profitable ones. So Canadian dollar, Japanese yen. And that's what the equity curve looks like over that 15-year period. So that's pretty good, isn't it? Looking at the close to close, it was really good. Although recently it does seem to have had a string of losses. Percent profitable, again very high on its own, 89%. Got a large average trade value of almost 25 pips, so that's really good. Even when we've taken out a few pips worth of costs, then we're still making a good chunk of money with this strategy. Euro pound wasn't profitable. Euro yen is profitable. Percent profitable is very high. Again, average trade 13 pips. That's still going to be profitable after costs. The equity curve is pretty rough though, isn't it? It's a bit all over the place, nowhere near as good as the previous one. Next one, Euro New Zealand, is the equity curve. Not that great. Average trade is pretty low at almost 5 pips. Euro dollar, not profitable. Pound Canadian dollar, only just profitable. Still has a high win rate. Low average trade though. Pound Japanese yen is profitable. Again, they've all got win rates around 89%, haven't they? The average trade, a large 19 pips, that's good. But the equity curve is sort of all over the place again, a little bit like Euro yen. Pound dollar is just about profitable, not very good equity curve. New Zealand dollar, Canadian dollar, not profitable. New Zealand dollar, US dollar, not profitable. US dollar, Canadian dollar is profitable. 87% profitable. Average trade of 19 pips, that's pretty good. The equity curve is not great. It was pretty good, wasn't it, up until what's it, end of 2015-ish, but then hasn't really been looking very good. US dollar, Swiss franc, that's the most profitable yet, I think. And the equity curve looks okay. What's the average trade value like? We're 90% profitable. We've got a large average trade at 25 pips. That's probably one of the best yet. That and Canadian, Japanese yen. The last one, US dollar, Japanese yen, that's not profitable, so we won't bother looking at that one. We've already discovered some profitable markets using that bailout exit. In fact, the portfolio of collective 14 different Forex pairs is profitable using that bailout exit. Some markets obviously better than others. Using a wide stop loss and that bailout exit often gives us a very high winning percentage. So if high accuracy is the sort of strategy you like, then you should consider using that bailout or first profitable close type exit. Next, we're going to look at an exit after being in the trade for 5 days and then after 10 days. But just before we have a look at those other tests, if you're looking for more rule-based strategies like the one we're looking at today, then at the moment you can get my 22-page Beat the Markets strategy guidebook. And in that guidebook, I'll show you 3 more mechanical trading strategies. I'll lay out all the rules and the backtest results. At the moment, it's free, and I'll leave the link for that in the description down below. If you've already got that guidebook, or you want some additional, maybe better strategies, then you should consider enrolling into my trading course. In the course, I'll give you 6 more trading strategies. And also, if you're a MultiCharts or a TradeStation user like myself, then I even give out the code for the strategies so that you can then copy paste or import it into your software. But the strategies can also be manually traded too, just with a regular Forex account. Links for that will also be down below. Now, let's go and have a look at some more tests. Now I've switched the exit to exiting after 5 days in the trade. Let's have a look how that performs. This is the portfolio of 14 pairs, and the net profit is much higher than that of the bailout exit. There's the equity curve looks like, and that's pretty good. Again, that looks a bit better than using the bailout exit. So this strategy, using it over those 14 pairs, does work as a portfolio. So for those of you who feel more comfortable trading strategies which work over a portfolio of Forex pairs, then this might be a consideration for you. Looking at the total trade analysis, we can see that percent profitable is only 53%, so that's way down on that bailout exit, but that's okay. Looking at the average trade, now we've got 16 pips, so by the time we've paid some costs, we're still going to be making money here. So collectively, as a portfolio, this is working quite nicely. But let's look at the individual Forex pairs too. Australian dollar, US dollar, not profitable. Canadian, Japanese yen, profitable again. Let's have a look at that. There's the equity curve close to close. So that's pretty good. Percent profitable, 64%. Average trade of 34 pips, that's large. So that's a good result for that one. Euro pound, not profitable. Euro yen is profitable. Large enough average trade, 60% win rate. Equity curve, not bad, certainly better than using the bailout exit. Euro New Zealand dollar makes a little bit of money, bad equity curve. Euro dollar is profitable. Equity curve, not the best, but it's okay. Large average trade, 24 pips, and around about 60% profitable, again like some of the others. Pound Canadian dollar, very large average trade at 52 pips. Equity curve isn't really good. It looks fairly flat to me. You know, it made a few really good trades early years, but then essentially I think it's gone a bit flat. Pound yen, equity curves not that great. It's going up, but yeah, it's not the best. Pound dollar, barely making any money. New Zealand dollar, Canadian dollar, barely making any money. New Zealand US dollar, not making money. US dollar, Canadian dollar, there's the equity curve. Average trade large enough at 18 pips. US dollar, Swiss franc. Large average trade, 33. And this pair worked quite well with the bailout exit, and it's got another nice equity curve using the 5-day exit as well, so that's pretty good. US dollar, Japanese yen is barely profitable this time. Equity curve, not very good. So now I'm going to change the exit from 5 days to 10 days, and we'll have a look at the results. Looking at the complete portfolio performance, 24,000 pips. So this is the highest amount of money yet. There's the equity curve, similar to the 5-day exit, but pretty good, working across all the pairs. Large average trade at 24 pips across the whole portfolio. Percent profitable is slightly down. We generally will have a larger average trade just because we're staying in trades longer now. Looking at the individual pairs, Canadian, Japanese yen, nice equity curve. I suspect a decent size average trade. Yeah, 51 pips, that's large. 66% profitable, it's not bad. Euro pound, not making money. Euro yen, decent average trade at 32 pips. Equity curve's not the best, but it's going up. Euro New Zealand, not making money. Euro dollar, making money. And that's better this time. Decent average trade at 32 pips, 54% profitable. Pound Canadian dollar. Massive average trade at 103 pips. That is big. And the equity curve's okay. It's not bad. Pound yen. Not a bad equity curve at all. Massive average trade, 115 pips, 58% win rate. Pound dollar, making money. Large average trade, 32 pips, 53% profitable. Equity curve's not very good though, is it? New Zealand, Canadian dollar, not making money. New Zealand, US dollar, not making money. US dollar, Canadian dollar. Equity curve similar to last time. They had that good early period, and then just sort of went flat over the last few years. US dollar, Swiss franc, that was working well last time, and we've got another nice equity curve. That's good. I suspect a decent average trade. Yeah, 60 pips. That's really good. 64% profitable. And US dollar, Japanese yen, not making money this time round. That's the 45 tests completed. And in terms of performance across all of the Forex markets tested, this strategy has to be one of the best that we've tested so far. The 3 portfolios using the 3 different exits are all profitable. And of course, some of the individual Forex pairs are much better than some of the others. Standout performing pairs are US dollar, Swiss franc, and Canadian dollar, Japanese yen, showing reasonable equity curves across all of the 3 different exits. Of course, there's more testing that we could do. We could look at the size of the body of the candlestick, which makes up the doji. We could look at that filter of the closing prices over the last 10 days and try out some different exits. There's lots more tests that we could be doing with this particular setup. And if there's anything particular that you'd like me to test out relating to this strategy, then please let me know in the comments. Hopefully, by the time you're watching this video, I would have copied all the results across into the free strategy database so that you can access the results whenever you like. I hope you've enjoyed this video and I hope you've found it useful. If you have, then please give it a thumbs up and maybe subscribe for more testing videos like this in the near future. That's all for this video, but I hope to see you next week. Until then, this is Jared Goodwin, and thank you.